Charlie Munger's Grave Prediction, Recession 2023. Charlie Munger, the enigmatic American billionaire investor, businessman, former real estate attorney, and vice chairman of Berkshire Hathaway, the conglomerate controlled by Warren Buffett, rarely gives interviews. But when he does, it's always fascinating to get his insight into the current state of the economy. And Munger stated, "If you thought the last recession was bad, then buckle up because things are going to get much worse." Hello and welcome to Finance Sense, where we cover all the latest trends in the financial markets and the economy. So make sure to leave a like, subscribe, and comment below if you enjoyed watching, and turn on the notification bell to keep posted. Now, let's start. When Charlie Munger speaks, people listen. As the vice chairman of Berkshire Hathaway and the business partner of renowned investor Warren Buffett, Charlie has a billion-dollar net worth and isn't hesitant to express his thoughts. This, together with the fact that Munger seldom does interviews, makes everything you are going to witness a rare treat. Charlie gave his opinion and insight on a wide range of topics, including the possibility of a future recession, the U.S. Federal Reserve, Tesla, and Bitcoin. Charlie Munger stated, "I basically like the existence of the Fed," in an interview with Becky Quick on CNBC. He further said, "I think in a world of fiat currencies, we need wise central banks. And if you look at Japan today, you would find that a central bank has made our central bank a little mouse that hardly tries to do anything. So we've learned that central banks can be really important. You can push them to great excess if you have to, and you're in enough trouble. So by and large, I like central bankers, and by and large, I hate Bitcoin promoters." Quick then asked, "When you say that we look like a mouse compared to Japan's central bank, is that a good thing? Look what's happened to Japan." Munger responded, "We haven't had to try it, but we get the kind of trouble Japan was in, of course. We'll do the same damn thing." Quick then asked a follow-up question, "Do you worry about the Fed creating a recession by slamming on the brakes too hard?" "I think the Fed is willing to have a little recession in order not to have out-of-control inflation," Munger said. Over the past several years, the Federal Reserve of the United States has garnered a great deal of media and public attention. Unfortunately, this is not good publicity, as many Americans now hold the Fed responsible for the highest inflation rate in 40 years and the weakening economy. For those who don't know, the Fed regulates financial markets, controls the money supply, and sets interest rates. Early in 2020, the Fed took absolutely unprecedented steps. After millions of jobs were lost overnight and businesses collapsed, the Federal Reserve dropped interest rates to near zero to keep the economy from collapsing. The Fed lowered interest rates, making it less expensive for companies and people to borrow money, which they subsequently spent and helped stimulate the economy. Together with large-scale government stimulus initiatives, this helped sustain economic growth and prevent a collapse that could have otherwise occurred. Charlie acknowledged the need for this course of action during the interview. The Fed may, however, have failed by taking too long to raise interest rates to more normal levels. Even though the economy was tremendously healthy in 2020 and 2021, the Fed held interest rates at zero. The stock market was in full party mode between 2020 and 2021. The value of stocks was soaring and the headlines centered upon BACs and meme stocks. Furthermore, day trading had regained popularity, and stocks with little sales and no prospect of profitability were selling for outrageous amounts. Due to their lack of involvement, Warren Buffett and Charlie Munger were referred to as outdated. Right now, Americans' top concern is inflation, which is at its highest level in decades. The Fed is currently making up for the lost time by quickly increasing interest rates in order to curb inflation. Higher interest rates raise the cost of borrowing money, increasing the total cost of large purchase consumers often make with credit, such as houses, cars, furniture, and electronics. For companies, this means acquiring less new equipment and supplies and delaying upgrades. If interest rates are increased, less demand will be placed on the economy, which should ease price inflation. The effort to limit inflation has one significant disadvantage. The Fed is striking a balance. Meanwhile, they want to ensure that the economy is slowed down sufficiently to bring inflation to a more normal level. But they also don't want to risk sending the economy into a severe recession by hiking interest rates too soon or dramatically. The Fed has publicly said it would take all necessary measures to control inflation. Jerome Powell, the chairman of the Federal Reserve, is comparable to a pilot attempting to land a huge airplane on a small runway during severe storms. From this, there are two possible consequences. The first being the soft landing. When a central bank raises interest rates just enough to prevent an economy from collapsing and suffering severe inflation while also averting a disastrous recession, it aims for a soft landing. Another consequence is a hard landing. When the Federal Reserve Board takes this kind of action, it causes a severe economic downturn instead of bringing inflation under control. A hard landing would have enduring consequences. People would be unemployed, businesses would shut down, and the value of a household's assets, including its real estate and stock holdings, would decrease. Skyrocketing inflation has put the Federal Reserve Board and Chairman Jerome Powell in an uncomfortable position where they either take drastic action or risk losing credibility. In his interview, Charlie Munger also expressed his hatred for Bitcoin, where he was blunt as usual. It pains me that in my own country, I see people that were once regarded as very reputable people helping these things exist growing there and so forth. This is a very bad thing. The country did not need a currency that's good for kidnappers and so on. I think they actually mean well, though that you're seeing a lot of delusion. It's partly fraud and partly delusion. That's a bad combination. Each year, the farm will produce crops for you, which you may sell and turn into income. You will have the asset and a large sum of money at the end of every year. In this example, the farm. Stocks are another example. When you purchase stock in a company, you're actually buying a small stake in the company's ownership. Ideally, that company will produce a cash flow to which you are entitled as a business owner. The cash flow that an asset generates during its lifespan determines its value, whether it be a productive asset or any other type of asset. Non-productive assets are assets you can only profit from by selling them to someone else, ideally for more money. These include silver and gold. The ounce of gold you purchase will not generate any income for you, and the market value of that asset will determine your fate. The only thing you can hope for is that as time passes, the value of that item will rise. This is why Warren Buffett believes that, given enough time, productive assets will almost certainly provide greater yields than non-productive ones. Bitcoin is considered a non-productive asset. Charlie Munger's claims that Bitcoin is worthless garner a lot of media attention. For him, Bitcoin is worthless since it doesn't benefit its owner. How do you evaluate an asset that doesn't earn any money when an asset's worth is the amount of money it will make during its lifespan? That's all for this video. If you enjoyed it, please like, subscribe, and hit the notification bell to stay up to date on our videos. And make sure to leave your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and keep learning. Until next time.